The local market has plunged today following large falls on Wall Street. Let's go live to the ASX in Sydney. Our business reporter Ed Boyd standing by. Ed, the market has dropped to its lowest level since February last year.
Lowest level in 16 months, Kieran. It's been a pretty tough day for both the Australian stock market and overnight on Wall Street. There were pretty severe losses we've seen in both of those markets. So ASX 200 today opened down 5.3%. That's the sharpest fall since around March 2020, at the height of the pandemic, when share prices across the world were plunging. So we've had a big fall this morning. The market has come back slightly. It's still down 4.7%. All the sectors across the market are lower. The big four banks are all down between 4 and 5%. The resources companies are down. And technology stocks in particular, they've been hit the hardest. They're down about 8%. So we can put up some of the worst performers on the screen for you, but Zip, the buy now, pay later company, that's down around 18, 19%. Chalice Mining, a gold miner, down about 14%. They're based in Western Australia. And healthcare company Mesoblast, they're down around 14% as well. So those are just three of many companies which are down today. There's only a couple of stocks out of the top 200 that are trading in positive territory. This is all after Wall Street shares collapsed overnight and entered a bear market territory, which is where an index is down more than 20% from peak to trough. So it was a big night of losses over in the US, and it's been a big day of losses here as well.
And Ed, the reason that share markets are falling due to fears of a global recession.
These are fears because of interest rates now needing to be lifted potentially much more rapidly and faster than initially anticipated. So late last week, the US released its inflation figures showing inflation hit a new 40-year high of 8.6%. And that's after the Federal Reserve had already been lifting interest rates this year. So even raising rates hadn't actually put a stop or a dampener on inflation. So now investors are really concerned that the US Federal Reserve, which meets again and will announce its cash rate call on Thursday morning our time, is going to have to lift rates even more aggressively, which could put some Americans out of pocket on their mortgages, potentially force them to sell their homes and lead to a similar sort of recession that we saw in 2008, 2009. So that's the fear. It hasn't obviously happened yet, but we'll be watching and waiting to see what happens with the Federal Reserve and interest rates later this week on Thursday morning, Kieran.
Ed Boyd will stay in touch.